Hello and welcome to the channel. Hope you're having a fantastic day. Today we're going to review the company called Data Storage Corporation. The ticker for the stock is DTST, and a very interesting stock. It started trading in 2009 and had very high peaks, and then it gets really low to like in penny levels. And we're going to talk about a strategy for the stock, and we're going to talk about what the institutional banks are holding for the stock and what the analysts from these institutional banks thinks of the stock, and also their company market cap and EPS, earnings per share, and how much average stock do they trade on a daily basis, right? So if you're new to the channel, please do consider subscribing. I release video every day. The objective here is to get you guys information on stocks that maybe are not highly visible, like for example, Apple and big stocks, the small stocks that could potentially be, used to make money. And we're going to talk about the technicals in a second. Let's talk about the company first. Okay, so the Dtst, Data Storage Corporation, is an infrastructure IT solution company that provides infrastructure, disaster recovery to IBM-specific products. It's only for IBM-specific products. So anybody using IBM, any company using IBM-specific products, they will provide their solution. And the reason the stock is going up really high today is because they reported their earnings have increased from 236%, which means from 2.6 million from revenue 2.6 million, they increased to 8.7 million, which is a great news. And investors are getting into the stock. They think the stock is going to do good because they got more subscriptions and the revenue is generating revenue right now. Market cap of the company is 22.77 million. It's a very small company. PE ratio is 113. It's really high, really high. The EPS, earning per shares, is 0.03, and the P ratio being 113 actually is where I make up my mind how I want to play this stock, right? Because it's really high, and I think we're gonna find an entry point, an exit point, and so on and so forth, and be able to make money like that. On a 52-week range, it's the lowest it got to is $2.04. The highest it got to is $13, and as I was saying, when it goes up, it goes really high. It even goes to $30. Not last year, but like before that, it went to $38 and $30, and then comes down to like penny levels, and then again, it has a very high fluctuations in the stock. As far as the institutional people, analysts, there's one company analyst. He says this is definitely a strong buy. He thinks the price should be around $8 for the company, right? As far as the institutional ownership is concerned, they own about 9% of the stock. 83,000 position increase for 8 of these firms, and 3 of firms sold out their position. So they do have more buying than the selling happens in terms of, I think they're shorting it too, to be very honest with you. And the reason I say this is because off exchange short volume is about 61%, which is in dark pool, and that would be your institutional banks. Okay, and I think most of them are shorting and covering their stocks, and that's why you see this 9%. So the company, as I said, right, the catalyst broke out, and the stock started pumping in the morning, and it went up all the way up to $3.80 from a previous few months ago, and that started going down now, right? So it's going to go down again, right? Essentially, it's going to go down to maybe $2 levels again. And MACD is really down now because it started coming down. Now moving average conversion divergence is staying down. EMA, which is exponential moving average, it looks like it is still there, but the candle started hitting that, so it's now bouncing back off of it. So if it started crossing the EMA moving average, I think it's going to go down to the same levels, probably $2.70 or even $2.31. But the point here is that RSI is down, relative strength index, that people are starting slowly selling the stock down now, and it's going to start coming down now. But the point that I was trying to make is to have it in your arsenal, have it in your watch list. Let the stock go down again. Watch for their next news or something, some catalyst that breaks out. If it does break out, you already know about the stock. You see how it does. When it does fluctuate, it goes at least $1 in a momentum. So it's a potential dollar gain in one share. So right now, I don't think it's an entry point for me at this point, because I think this is said and done. There's not going to be enough volume for the stock to be traded, with a lot of volatility. So for me, this is just going to be sort of an FYI for now. Just put it on your watch list. Make sure to watch out for the stock when it does come up with a news catalyst, a positive one, of course. Then, you already know the stock is going to have a good day that day, and you could just jump in. And again, this is not a financial advice. This is what I'm going to do. So basically, if you feel that that's the right approach, then you should take that approach. Just wanted to put it out there, just, because right now, as I said, it's not going to move any further up. I believe it started coming down. But if it does, for example, would have crossed $3.70, it would have gone to $3.91. And if it does cross that, it's going to go to $4.24. But I don't think today's a day for that. Add it to your watch list. Hope you guys like this video. If you're new to the channel, please do consider subscribing, and I'll talk to you guys in the next video.